Hello, community. Dr. Kenyon Meadows, alternativefinancialmedicine.com. Podcasts have been an absolutely critical component in my journey in learning about alternative assets. And one of the very best when it comes to real estate is biggerpockets.com. As many of you know, I have the honor to be the guest on episode 219, where the host and I focused on some of the more passive investing strategies suitable for the time-constrained, busy professional like myself. And it included things like turnkey rentals, private mortgage lending, and real estate crowdfunding. I was an early adopter in the real estate crowdfunding arena, having invested there since 2013, and many people have reached out to me on the heels of that podcast interview, wanting to know a few more details regarding which platforms I use and what my results have been, so I thought I'd do this video to address those points. Now, there are a lot of platforms out there with new ones coming out every month, it seems. So I'm going to highlight just 3 of them that I feel have distinct profiles in terms of the type of deals they offer, and they also meet the following criteria. Number 1, the platform has been in existence for a minimum of 3 years. Number 2, I've been investing on it for at least 2 years. And number 3, I've had at least 1 successful exit. So to start, let's go with realtyshares.com, which I would consider sort of a jack of all trades when it comes to real estate crowdfunding, in that they offer a wide variety of deals, including both single and multifamily residential, as well as commercial projects. They offer first as well as second position debt and also plenty of equity opportunities. Depending on the type of project and deal size, their investment minimums vary greatly. And while their website banner says the minimum is $5,000, in actuality, they have projects you can participate in for as little as $2,000, ranging all the way up to $30,000. This has been my number 1 site by volume. And again, they have an ample diversity of offerings that can suit a number of investing styles. Next up would be Patch of Land. And from the beginning, they've been focused exclusively on single family residential properties with first position debt for fix and flip projects. Accordingly, these are all short 6 to 18 month duration loans with a typical interest rate in the 9 to 12% range. The minimum investment is $5,000. And Patch of Land is a particular favorite of mine because when it comes to crowdfunding, I only do first position loans. For now, both Realty Shares and Patch of Land are limited to accredited investors. And again, according to the SEC, that means you either earn more than $200,000 annually as an individual, $300,000 as a married couple, or have a net worth of $1 million minus the value of your primary home. With only 4% or so of the population meeting those criteria, it obviously limits the number of people who can participate, as the vast majority of platforms have this restriction. There is one platform I know of, however, that doesn't have this restriction, and it's called groundfloor.com. Their mission has always been to cater to the non-accredited investor with residential fix and flip projects using both first and second position debt, and with a minimum investment at an unbelievable $10 to participate. They advertise average returns of 10% since their founding in 2013. Now, a big non-financial restriction for Ground Floor, however, is that you must be a resident of these 8 states to invest currently. It's a long and complicated regulatory issue as to why this is the case, but I know they're working on it, getting a 50-state exemption, so you should check back for updates when it'll be available nationwide. So when I'm going on a site looking for a debt deal, there are some pretty standard elements that are presented to you in the user interface. Besides the standard array of pictures, you will see the overall loan size, which in this particular case is $147,000, and it's offering an interest rate of 10.25% and a 12-month term. You'll also be presented with the after repair value or ARV percentage, which ideally should be below 65 to 70%. There's a graph indicating what percentage of the loan has been funded. And from my experience, most projects will fund anywhere from a few days to a week from the time they are listed. The platforms also provide an abundance of electronic documentation, allowing investors to perform a thorough digital due diligence, as I call it, prior to committing any money. Items typically included are the developer's track record of past projects, a renovation scope of work, and some form of price analysis, such as an appraisal or market comparables. On the more long-term equity projects, the capital structures can be more complex and include components like preferred equity and mezzanine debt. And I've certainly seen many projects get funded in a matter of hours, particularly if it's in a favorable geographic location or if the interest rate offered is very attractive. Of course, this makes it pretty much impossible to go through all of the due diligence documentation and highlights one of the fundamental limitations about real estate crowdfunding in that you have to trust the platform's underwriting process. When it's all said and done, you have to have the confidence that all the deals listed have been scrutinized thoroughly, and the platforms certainly have the incentive to do this because if too many deals were to fail to perform, investor confidence and their capital would be quickly lost with very little chance of earning it back. Thus far, I think my experience validates pretty solid underwriting. Out of the 35 projects I participated in, I've had 17 successful exits and 15 are current and performing as expected, while 3 are in some various stage of the foreclosure process. With the foreclosures, I'm getting regular email updates from the platforms, and in all cases, they're confident that my original capital will be returned after taking possession and subsequent liquidation of the property. These relatively few negative experiences reinforce my original decision to stick with first position debt, as ultimately this is the safest place to be in the capital stack when inevitably some of the deals don't perform as expected. So real estate crowdfunding to me represents, and I should mention, my average annual return over this time has been a very satisfactory 11%. So real estate crowdfunding for me represents an exciting and emerging asset class that is bringing an unprecedented level of access to the retail investor by leveraging the power of the internet. It represents a welcome way for me to diversify my lending portfolio, and I think it deserves a serious look for the studious investor willing to learn about the industry. Check out some of my video interviews with the CEOs of Realty Shares and Ground Floor on alternativefinancialmedicine.com. And be sure to join our email list, subscribe to our YouTube channel, and follow us on Facebook. And of course, Alternative Financial Medicine, High Yield Investing in a Low Yield World is out now on Amazon. We cover many other asset classes, including small business lending, rental property, peer-to-peer lending, all with the goal of getting you a double-digit annual return. So far, the early reviews are quite positive, so I encourage you to pick it up, and I'll talk to you again soon. Thanks.